Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 19th of September 2019, and we are stating why we should expect $17.50 silver and $14.50 gold very soon indeed. So let's investigate. Yesterday, we posted two videos. The first, will the Fed cut rates today and what will happen to gold and silver prices? And the second, gold and silver prices fall on Fed rate cut announcement. Now, if you haven't listened to these, we seriously suggest that you do, particularly the second one, as we highlight the factors that the Fed is taking into account and what will likely cause them to lower rates again, or not, as the case may be. We put a link to both of these videos in the description box below. Anyway, back to the market reaction. When the rate reduction of 0.25% was announced, the Dow Jones fell by over 120 points, from being down around 60 points before the announcement, and then dropped further down 180 points. But when the press conference was given, these falls reversed, and the Dow actually ended up 36 points at 27,147. The S&P also reversed fortunes and ended up 1 point at 3,006. And the Nasdaq recovered most of its losses, but still ended down just 8 points at 8,177. Now, such moves aren't surprising, as generally markets fear the worst on announcements and then tend to retract their previous positions after the decisions have been explained. Now, we saw a similar reaction with gold and silver, in that before the announcement, gold was $1,508, immediately falling to $1,497 after it, and then again further to $1,483, only to recover after the press conference to $1,496. At the time of writing on Thursday morning at midday, it stands at $1,499. Silver, before the announcement, stood at $1,791, immediately fell back to $1,769 and then briefly to $1,752. And recovering some ground, but not all ground, to $1,774. Now again, at the time of writing, silver stands at $1,776. And everyone is asking, which direction is it likely to move towards from here? Well, just over 2 weeks ago, on Wednesday the 4th of September, silver peaked at $19.65, and we thought it was too high at just below $19, calling for $17.50 silver. It then fell back, particularly last Friday, and reopened this week at $17.44, peaking as high as $18.08 on Tuesday. So it reached and then surpassed slightly lower our $17.50 assessment. Now please bear in mind, to put this into context, we were calling $17.50 when others were stating $20 was a definite, and up to $26 very soon after that. Anyway, we are now at a level where markets are somewhat uncertain, and let's explain why. The Fed had to cut rates yesterday for a number of reasons, not least of which being that equity markets had already priced in either a 50 basis point cut or a 2 times 25 basis point cut for this year. Jerome Powell saw in December last year what could happen to equity markets if the Fed does not deliver what they were expecting. Also, the Fed is receiving contradictory financial information. Consumer confidence and consumer spending is modestly high. Unemployment is almost at a 50-year low. And there is still strong jobs growth, though the last report showed the rate weakening. And the US dollar is still the go-to currency compared with its overseas counterparts, such as the yuan, the euro and sterling. Also, household debt is on the decline, while average earnings for such households is rising, albeit slowly. On the negative front, manufacturing output is weak, business confidence and more importantly capital investment is low, primarily because of the uncertainty over President Trump's trade wars, particularly with China. And business debt levels are also a concern. In addition, the global financial situation, where most countries are announcing lower growth rates ahead, has to be factored into the US economy, as it is relying on such countries for its own exports. Added to this is also the fear factor that the recent inverted yield curve in US Treasuries suggests there is a recession on the horizon, and the controversy and potential military infractions with Iran are also looming on the horizon. The Fed has to factor all of these criteria before making any policy decision, which is why Jerome Powell stated yesterday that the FOMC will view the economy and make future rate decisions on a month-by-month basis, assessing the available data at the time. What did give some heart to markets was his announced determination to keep the US economy growing and maintain full employment and steady prices, which is code for he will reduce rates further if economic factors decline. He also suggested something else which should not go amiss. He virtually, or actually, ruled out negative interest rates. Now, there are good reasons for this, but it's too long and complex an economic debate to go into right now. But he did suggest that if his ability to reduce the Fed funds rate further is exhausted, that is, it hits 0% or close to it, then the Fed will consider additional asset purchases and forward guidance, essentially meaning adopting QE once again. But he did add that he felt this was unlikely to be necessary. So coming back to gold and silver, and especially silver, what are we to make of all of this? Okay, we have to point out right at the start of this section, if there is more military infractions with Iran, or the China trade talks fail, or some other black swan raises its head geopolitically, then gold and silver prices will rise from current levels and potentially quite sharply, at least 10%, and quite possibly more before the end of the year. However, if a trade deal is struck with China, the Iranian situation cools down, and President Trump negotiates a few additional deals with overseas countries, then we may see quite a reversal in their price to lower levels, again by up to around 10%, and especially if President Trump is in a position to announce a major infrastructure investment in the United States. You see, despite what the pumpers tell you, sorry, we had to mention them as someone told us off for not mentioning them in our last video, the US dollar is still relatively strong compared with other global currencies. And yesterday's announcement, though perhaps weakening the dollar slightly, was insufficient to weaken it to any great extent. In fact, at the time of writing, it stands at 98.3, down just 0.23 points. Also today, the OECD, the Organization for Economic Cooperation and Development, has announced that, quote, the global economy risked entering a new, lasting, low-growth phase if governments continued to dither over how to respond. The global economy will see its weakest growth since the 2008 to 2009 financial crisis this year, slowing from 3.6% last year to 2.9% this year, before predicted 3% in 2020, unquote. In addition, it also confirmed that trade tensions have weighed on business confidence, knocking investment growth down from 4% 2 years ago to only 1% today. Now, also reported by Reuters today is a warning from analysts that China's growth rate could indeed slip below 6% for this year, though this is disputed by economists from China. So despite a slight weakening in the dollar, which would normally lead to higher gold and silver prices, despite the Fed announcing more rate cuts to come and QE if necessary, and despite the announcement from the OECD and negative China growth predictions, both gold and silver are quite frankly little moved. And this is concerning for the precious metals. It really does appear that gold is struggling with the $1,500 level and silver with the $18 level, as forays into those territories have resulted in relatively quick reversals. Traditionally, it should be noted that whilst there are the normal blips up and down around Fed decision days, as some traders do not wish to get caught out in either direction, it normally takes a day or two for the dust to settle. Once this occurs, unless the markets are significantly surprised, the preceding trends are likely to be continued after the interest rate decision is made, and the preceding trend in the precious metals market remains down. This is why we believe that silver could once again fall back below 1750, and soon, and gold move closer towards 1450. Though we are still a little more bullish gold than silver at this point, especially if there's going to be a global slowdown worse than anticipated, as this will adversely affect the industrial use of silver. Now, once again, the preceding caveats apply vis-a-vis Iran, China, and to a lesser extent North Korea. For the moment, however, whichever direction precious metal prices move from here, the one thing for certain is that they should today be at least 5% higher in view of what appears to be ahead of us in terms of economic and geopolitical concerns. That said, and we've said it before, equity markets love low interest rates. And while that rests on the horizon, gold and silver only really have the fear trade to fall back on. As for now, there are arguably more attractive returns in the equity market, even though we ourselves would not be buying at this stage, as like many of you, we believe the downside potential is greater than the upside potential, even though there could be another 1,000 to 2,000 points left in the Dow to go. Gold and silver have moved up considerably since January the 1st. Gold is up 17% and silver is up 15%. So any pullbacks at this stage are likely to occur, though we suspect that it'll be more so next week than this. Now, to conclude, we ran a competition for fun yesterday asking members to estimate their views on whether there would be a rate cut, and if so, by how much, and what both gold and silver would close at the end of the day. And we found, to be fair, many of you were quite close on one or two factors. But overall, John Runyon, Jon Runyon, was the closest, predicting a 25 basis point cut. Gold would close at 14.89 when it actually closed at 14.94. And silver would close at 17.76 and it closed at 17.73. So only $5 out on gold and 3 cents out on silver. Well done, John. So John, if you are willing to send us your PayPal email to illuminatisilver.com, we will send you the closing price of silver yesterday, $17.73 by PayPal, as a reward. You were extremely close, and actually closer than us. We predicted the 25 basis point cut, and we were pretty darn close on gold ourselves at 14.90. But we did expect silver to fall back to 17.60. So you were closer than we were. Although we didn't reveal it, we admit that we were beaten yesterday by John. Thank you to everyone who participated in this competition. Until next time. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.